problem. So this is basically the course outline. It is broken down into 6 parts, okay? Into 6 parts. The first part is the introductory class, where we talk about the basic stage. The second day, we talk about manipulation stage, where we talk about all of the concepts within trading, the retail concept, which comprises of support and resistance, chart patterns, smart money traders, and um, highs and lows, which are also liquidity. And then we also talk about the intermediate stage, which is supply and demand, imbalances, accumulation and distribution. Then the third day of the mentorship is when we'll be going into the advanced stage, which is where we'll be talking about the algo, okay?
Okay.
Algo structure, algo liquidity, algo cycle, and selecting POI. This is where we talk about everything about algo structure. And then the day 4 is basically for entry, okay? We'll talk about the entry models, the entry confirmation, and other confluences, okay? Also, we'll talk about your entry rules, the do's and don'ts, okay?
Okay.
And after the day 4, the day 5, after we were done with the entries and all that, we'll talk about the trade management, how to manage your risk properly, how to set your stop loss and take profit regarding the algo structure, how to partial out the break-even rules and all that. Still in the day 5, we'll talk about fundamental, the news, the trading plan, and then implementing everything. The trading plan, which is very important, and then how to actually trade news.
Okay.
Then for the day 6 is basically the finish, the last session, okay? Where we'll talk about the trading psychology, everything about trading psychology, how it has impacted our trading, and what to do in order to overcome some of these factors, in order to master our trading psychology, what to do. And then I have the breakdown of how we are going to go about it. The introduction phase, the introduction, that's the day 1, is supposed to last for an hour, okay? An hour and 10 minutes, but depending on how well we understand it. So are you ready for the same thing? Because
Rhino.
we learned together from a mentor. Yeah, we learned from Rhino. So literally we treat like the same thing. Okay. So everything about us is the same. Okay, bro?
Okay.
Yeah. So normally, in the forex industry, there is no holy grail. Okay. There's no holy grail because you looking
Yes.
for
Yes.
a particular strategy that's going to work, okay, is going to take time. So what you do is for you to like get a strategy that has been working for others, you put into practice, you backtest, you front test, you study charts, do daily review, daily markups, and then you'll be able to like improve on that strategy and put it to action. Okay, that's when a strategy becomes good. Okay.
Yeah.
So now, actually, Algo will it's going to give you this sense of direction. Okay, that when you open the chart and you just look at the chart, right? You just look at the chart, you'll be able to tell where price is going. Or you get, when you just look at the chart, you'll be able to tell, okay, price is going to fall from this point, or price is going to go up, or price is going to do this. So when you just look at the chart right here, just with a single horizontal line, be able to tell that, okay, this is going to drop. So what you're going to do next is for you to like look for ways to get engaged in that trade. Okay. So Algo is going to like give you a unique way of looking at the market. Okay. So as we proceed, you are going to get things right. Okay. Slow and steady. Okay. No rush. First thing on the course is how to identify structure and your trends, okay? Because the way we read the structure the objective way and not the subjective
Okay.
way after the other. Now, what is trends? Trend now, how you be able to identify trends is by simply higher high, higher low, lower high, and lower low. The normal way we own it, right? That means by simply higher high, higher low, lower high, and lower low. The normal way we on it, right? That means for an uptrend, we want to see higher high, higher low, higher high, higher low, higher high, and higher low. So this is what we want to see for an uptrend. And for a downtrend, we want to see lower low, lower highs, lower low, lower highs, lower low. Now, this is our uptrend.
Yeah.
This is our downtrend, right?
Right.
Then for ranges now, is when you don't get clear definition of highs and low. Probably you might get a higher high, a higher low, higher high, and then price fail to create a new price fail to break this high to give us a new higher high, right? You're right. So now I'm trying to explain ranges, okay? For ranges, you don't get a clear high or low. Price just keeps on ranging, okay? Price keeps on ranging. But if you look deep into this range, okay, if you understand the algo structure and you look deep into this range, you'll be able to see that inside this range, you can get a lot of opportunities to take your trade. Because algo traders, right, they can trade both in a trendy market and in a ranging market. Now, this random pattern that I drew here, okay, let me show you something now. This low is our liquidity, right? Price took liquidity, failed to come and take this high at this point, then price came lower. Now, this becomes a double inducement. We are going to get to that level, how to understand it. So I can take my buy from this level to target this high, okay? And now, right here too, we have this like this, okay? We have this as liquidity. We also have another double inducement. I can also take another buy from this point. And after price takes this high right here, I can look for sell right here. So inside a trading range, right? Inside a trading range, algo traders can catch every move. You can catch this buy, catch this sell, catch this buy, catch this, catch every move. That's how you see most traders do catch every single move, because just looking at price action, looking at liquidity level, you can get engaged in your trades. I don't know if you understand that.
Okay. I understand.
Yeah, cool. Okay. Now let's look at how we view structure. Okay. How we view structure. Now, I am going to open a chart. Okay. Let me
Okay.
look for a time frame. Now, you know how every single candlestick sounds, right? Where we have, let me use my part tool. Now, you see this single candle right here? See this
Yes.
single candle?
Yes.
All of these single candle, right? In order for us to mark structure points, we consider every single candle. If we have a single opposing candle, right, it actually means something in the market. Now, you know how candlestick works, the open price,
Yes.
the
Yes.
close price,
I,
and
I
the
I
way
know everything
you
about candlestick.
perfect. I love that. Okay. Now, see something now. I am going to mark the structure points from this range right here for you to see. Okay, from this range for you to see.
Okay.
Now, considering every candlestick, right? Let's do this. This was our low, our previous low, right? This was the high. Let me change the color. Hmm, Let me change color. Good. We have this low, we have this high. And in order for us to consider our next structure point, we want to see price break out of either the high or the low. We want to see price break out of the range. Okay?
Okay.
Yeah, good. So let me just draw it out before we look it on the chart. So when we have this, we have this, we have this. Okay.
Okay.
From this high and this low, okay, it becomes our range. Okay. For us to get a new structure point, we want to see price break out of the high. So if price breaks out of this high right here, okay, we want to see a small push down, okay, a little retracement of opposing color, okay.
Okay.
Sorry, let me delete this guy. So as we had this bullish move up and then price made a bearish move, right? Then we now have a new bearish move, right? Then we now have a new range. This high, we are going to mark this high at our new range. this low as our new low. So inside of this range, right? If price breaks either the high or the low, we get a new structure point, right? So if price should break out of this low right here and then creates a little retracement, we then have a new range, okay? Then we'll mark this low and this high becomes our new range. Okay, now for us to get our next structure point, we want to see price break either the high or the low. We want to see price break out of the range in order to mark the next external structure point. Now, before price should break out of the range, right? If price starts doing this, creating little structure points, right? Creating structure points and then breaks this guy. Let me use this example, sorry. So if price start creating all of these, right? All of these, then it breaks out of the range this way, okay? Don't forget, as price breaks out of the range, it then creates a new retracement. We have a new range. This low, this high, because this high was the high responsible for the break. So this range right here becomes our new range. Now, everything happening within the range, that before the break of either the high or the low, is our internal structure, okay? So all of these, they are internal structure points, okay? So now as price breaks out of this range right here, we now have a new range, which is this high to this low, okay? If price start doing all of this, okay? All of this before breaking out of the range, all of this little move right here is the internal structure, okay? So until price breaks out of that range before we get our next external structure point. Do you understand that?
Yes, I can.
Okay, we will actually look at it on the chart for better understanding. So let's continue the markup of what we're doing. Now,
Okay.
this is our high, this is our low, right? Now, you are going to notice that pure price did. Before it break out of the range, price went up. Remember I said we are going to consider every single candle as a candle movement, because reading every single candle is going to make you understand every detail in the market. You won't be missing a lot of moves. Because now look at this bearish candle right here. Price went down. Okay, price went all the way down to this level, right? And then what did price do? Price created this bullish candle. And a bullish candle signifies that price actually went up. So price went higher to this point, okay? And then created a bearish candle, right? Now the next bullish candle are these guys, 1, 2, 3. That means price went up to this level. Price came down to this level. Looking at all of these black candles, right? Price came up, came back down to this low, came back up, and then we had bullish, bearish candles right there forming. Price came down. Now this single bullish candle, it actually signifies that price went up. Okay, price made a bullish move and then it came back down, went back up to this level, because all of these candles are bullish candles. Okay, price went all the way up, and then this single bearish candle signifies a structure point. It came down and then it came back up, because sometimes we can say this single candle here doesn't matter, so we'll mark all of these as our range.
So
Do you know what I'm doing? I'm trying to like tell you how we read every single candle, how every single candle is formed, okay? In the sense that if we have a bullish candle, price went up, a bearish candle, price went down, because we are going to use that to mark out all of our external structure points from here, right, down to where the market is, which is what I started right here. Do you understand that? This
yeah.
is how candlesticks form, okay? So now let us mark out, let's keep marking, okay? So now we had this high and we had this low as our range, okay? Now what did price do? We are marking the external structure point, right? What did price do? Price came down and then price broke the range. Now, before price broke the range, what did price do? It created internal structure points, because price came back up, came down, came up, okay? This black candle means that price came down, then price used this candle to break out of the range. So at this point, price broke out of the range. Now this low right here, this low and this low, okay? They now become our internal. Now this low right here, this low and this low, okay? They now become our internal structure.
Okay.
Okay, They become internal structure because they are happening inside the trading range, inside this high and this low, okay? But until price breaks out of the range, everything happening within that range is our internal structure, okay? So now we are marking external structures only. We are going to come back to mark out internal structure. So we have this right here as our range. Now, as price broke out of this range, let me save this template. So for bullish candles, we have green, right?
Right.
For bearish candles, we have red. You are okay? This is okay for you?
Yeah.
Okay, good. So green is bullish and red is bearish, okay?
Yeah.
So now let's keep on marking our external structure points. Now we have this high and this low at our range, right? I'm going to use the path tool so you're going to understand. Okay, I picked my tool. So we have from this high to this low, right? And then price went all the way up and broke out of the range. Now price broke out of the range, price came back down, right? As price started this retracement, right?
Right.
This high becomes our next high. Okay, this high becomes our next high. So our new range is going to be this guy right here. Our new range is going to be from this low to this high. Now we want to see price break out of either the high or the low. And now what did price do? From this low, price went up to break the high. Now as price broke through the high right here, right? This low was responsible for the break of the high. And then as price broke the high, price started retracing, okay? We had an opposing candle, a red candle. As price started retracing right here, we marked this high, okay? And the low that's responsible for the break. And then we have our new range from this high to this low. This becomes our new range, okay? And now we want to see price break out of either the breakout of the range before we get our next structure point. Now, let me use the brush tool to mark out this structure point. Now, this is our low, this high, this high, this low, and this high, okay? Now, these are all external structure points. Can you see them?
Yes.
These are all external structure points, okay? This high, this low, this high, this low, and then price broke through this previous high, right? Now, price started retracing, okay? Now, what did price do? Price created, see what price did. Price created this low, this high, this low, this high, and then came back down. Now, this right here, all of these structure points is formed right here. It happened within the range, okay? As it happened within that range, everything within the range is internal structure, okay?
Yeah.
But don't forget, we are marking external structure. So now, what did price do? Price came all the way from this high and broke out of this range, okay? Price broke out and came all the way to this point. And then price started retracing, okay? As price started retracing now, what we're going to do, we've already marked the high. Now we're going to mark exactly, you're following. If you understand this internal